Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, February 6th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right here that the ES is now above the key range high. The key range high is the high, the impulse move that we saw this month, or rather in the last month, where price drove downward and rallied tremendously, hit a top, and then pulled back to the midpoint, and that gave us a key range right there. And now that key range is very important. And in an uptrending market, you typically want to defend down at this zone for a bounce back up, and you also want to look up here for signs of rejection, because if price pushes through the key range high and rejects, then you have an easy shot to pull back toward the middle of that range, which is at around 32.60. And then the potential to go across the range as well to the opposite side. So right now what we're seeing is obviously a market that's very, very bullish overall. But we've seen an increase in volatility in this window right here. This increase in volatility has been significant, and could easily, if rejected here, see a swing back in the opposite direction. And then we could see it happen right again. So you got to watch this high right here. If there's a failure to hold, say 33.40 or 33.35, that could open up quite a bit of near-term weakness back down. So we'll continue to watch this. Obviously, this market remains very bullish, so any short-term pullback that occurs, should it occur, you got to be willing to take profits quickly, because they don't last long in this pullback here. They've been few and far between before it's bounced right back up. All right, let's take a look now at the NQ. Here's the NQ. Now, this one really pushed past the previous high here. That's the previous month's high, really rallied. And right now you're seeing kind of an inside day today, a double day here where it's kind of traded at the highs and held. Yesterday, the NQ showed a little bit more weakness off the highs and was a bit more weak than the S&P 500. And again, even if it were to lead to some sort of pullback, it could be a modest pullback, say to retest 91.38. That's the FOMC key level. It took it bid here, and it saw major expansion to the upside. If we are failing a bit here, or if we are overextended, perhaps we pull back to that level. That could be a near-term pullback. A deeper pullback would take you to the LVN. Each of those could be short-term buying opportunities as well. So right now, inside day at these highs, we'll see which way we go here, but for the most part, this market's been very bullish. We may be at a cycle high, which suggests we could see that pullback, but then perhaps another swing move higher may occur. And that's similar to what we talked about here when we had this move here and then a bounce. We talked about it back here as well. So again, this has been the pattern of the market until proven otherwise. All right, let's take a look now at crude oil. Now, crude here is trying to hold at or around the previous month's low and close. That's the previous month's close, previous month's low. And you can see 4 days this week it has been rejected each of those days at the previous month's close. 3 of the 4 days so far has seen price trade below that previous month's low. And so again, you know, is the market going to be able to reject that zone? This is the best spot per the key range. And so again, when you have a key range that has been very prominent, as this one has been, you can see the low come in here, high. A rejection here would easily point to this target right there, and that's 57.28. And from the low of the month, the current low of the month, which is right here, your average monthly move would be 57.26. That's 2 ticks off. So again, that's a really good target zone if the market can reject here. Now at the moment, you can see that it appears very bearish still though. You have a downtrending PIMA trigger zone, and then right here, price pushed into the PIMA trigger zone, immediately rejected today. It had a signal, but because it just pushed down to new lows, that signal is now gone for now because of the geometry of the bar. But overall, this could lead to another sharp turn downward. until proven otherwise, because this market has not been able to prove that it can bounce. So if anything, this recent pivot high gives us a high to watch, because if it comes down here and say it rejects hard over here, it's going to be that high that it's going to take out to start working higher. So we have some key pivots here to continue to watch in crude oil, and this is a big time zone. And one last thing here about crude, again, this is a big time area of support right in here. Just call it 50 bucks or 50.50, right? It's been a really big time zone of support, and we've been trading around there but haven't really fallen. And again, if we can reject, there's clear air back towards 65, but easily toward 57. If the market cannot get back above 52s here pretty soon, and really get back above it, there's clear air to the bottom as well, all the way back toward 42.5. There's nothing there. So again, if this is going to continue to dump here, it has nothing to stop it until you get to about 42.5. All right, lastly, taking a look at gold futures. You'll see with gold, we're kind of near highs right now, up about 0.4%. This market has been very bullish overall. It had a couple of bearish days here where it really pulled it back and broke it below the previous month's midpoint. We are now seeing kind of an extreme reversal pattern develop here, whereby we've pulled back. The previous session was a positive digestive day, and now we're going to start going back up, perhaps toward 1598, right? Back up to this zone. Overall, this market appears range bound with an upward bias, and as long as it stays above 1525, it has even more upside strength ahead. But if the broader market continues to show much more strength, this thing may have to pull back and test that 1525. So we'll see. All right, that's it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.